The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 12th. Magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that you and I, each of us, should always be pioneers of our future versus prisoners of our past. And, of course, hope everyone out there had a fantastic weekend. Really just a great weekend out there. I hope you did. I know I did. Let's make sure that you and I, that we do everything we can to have a magical week. And, of course, the easiest way and the best way to do that is to always remember that life happens for us, not to us. Just that one change in words, the words from 4 to 2 makes all the difference in the world, because what it really means that you and I, we can find a gift. That's right. We can find a gift in every set of circumstance that happens to us. And yes, the universe, it's going to throw circumstance at us. It's like the wind. It's going to happen to each of us. So it's up to you and I to always find that gift. Of course, all we need to do is really learn to plant a good sail and then let the wind be at our back out there. So on this magical Monday, of course, we got playoffs tonight, football playoffs tonight. That should be a good game. Are you a duck or a buck out there? How about that? Hey, I'm grateful for your presence here today. No question about that. I'm here to serve you. So go ahead, if you want, give me a call at 877-927-6664, or you can 6648. Gotta have that last number in there, that last digit. Internationally, you can reach out to us at 727-445-1044. This is Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show right now. We've got Dow futures are trading up about 44 points off of their high from earlier this morning, trading out at 17,693. S&P futures are up about 5.5 points. They're trading out at 2,040. NASDAQ futures up about 13 points, trading at 42.14. Or so. The king of beers, the king of dollares on the move this morning, up 158 ticks, trading out at 92.30. We've got some movement in the euro, some movement in the yen, some movement in the pound, movement a little bit everywhere except for the South African rand, it looks like. Goldilocks is up $8 right now. Trading out at 12.24. Gold is traded above the trend line, the descending trend line out there. That's bullish for sure. We'll see how it closes today. Silver's up 13 cents. She's traded at 16.55. Light sweet crude on the other end, back $1.58. That's trading out at 46.79. Of course, we know long term, it's that $30 mark that maybe in the sights for a lower price out there. We'll take a look at it. We can look across the pond out here. Well, you got natural gas is back 7 pennies as we speak right now. Let's look across the pond out here. We've got the DAX in Germany up 117 points. That's up 1 2/10%. FTSE up 7 points. So we got a flat market over there. A little bit of a mixed bag in Asia last night. The Nikkei up 30 points. No big deal there. A little less than 0.2%. The Hang Seng up about 0.4%. Closed out at 24,026. That was up 106 points. And the Shanghai down 1 3/4% off 58 points. All right, so where do we begin our day here? Might as well go begin by taking a look at the futures out here. Let's start off and look at the daily contracts, get a feel for what it is that we're looking at. Let's start here with the Dow. Let's take a look at the Dow futures. What do we know about the Dow? At this stage here on a daily chart, we know that the Dow broke through its little trend line off of the December 31st, December 29th high, December 26th high inside the futures contract. Nonetheless, the diagonal yellow lines, we know that the Dow broke above that with conviction on January 8th. Let's go ahead and remove that from the chart. We don't really need to be paying attention to that. We know that we've had a breakout in that direction. If we take a look at retracements, if we go from the high from December 26th down to the low on January 6th, we know that the Dow has hit the 0.786 retracement level. It did that on Friday. Got up to 17,860. Well, it got up to 17,864. 17,863 is the exact 0.786 retracement. That always amazes me. We've seen a little bit of a back off off here this morning, but that back off on the daily chart here for the Dow futures, the bullish side. Now we know what it did retracement was. I'm going to go ahead and get rid of that as well because we can always redecorate the chart. If we take a look at our TAS market profiles, we can see that the Dow on its daily chart is trading above its resistance level. So on Friday, we saw Dow futures get up, test the 0.786 retracement level, let some folks off of the elevator. Then comes down even intraday, and it gets down to a low 17,612. The actual top of that box, 17,606 out there. So, it's in essence, it's still trading in what we'll call potentially bullish territory out here. At least this is what the futures are doing as we speak here this morning. Very key for the Dow today to stay above 17,606. If we start to see it as the market opens 9:30 to 10 o'clock, get below 17,606, we're likely to see a move down to test the swing point from January 6th. Could be the high at 17,502, could be the low at 17,176. But that would be the message if that's what we see take place between 9:30 and 10 o'clock this morning. Otherwise, what is it that you should expect? Well, you can expect a test of at least Friday's high. And if you take out Friday's high, it says you go up and you get to those December 26 highs out there inside the 18,051 level. That's what's going on inside of the Dow. If we go take a look at the NASDAQ out here, the NASDAQ, what did it do? Same things, really, right? We had a descending price channel out here. That started really with the trading session on December 30th. We saw a clear break of that on January 8th, wide-ranging bar. That's how you like to see prices move above trend lines or channel lines. We haven't seen that in gold, but we have seen a break of the trend line. But this is really what your preference is, to see a nice wide-ranging bar. Why? What does that mean? Well, the size of the bar tells you a lot about the power. Yeah, the power of the move higher out there. And then what do we see here take place? So let's go ahead. Let's remove that from the screen out here. Probably ought to just turn it off. That way I don't have to really redraw it. Really, I should do this in a smart fashion, not the way that I just did it on the Dow. So let me see if I get rid of that channel line. There we go. So we'll take that off of the chart. Now, what do we know about going from the high to the low inside the NASDAQ? The high from December 26th down to the low on January 6th. Price got to the 0.618 retracement level out there. Backed off. And that's what it really did on Friday. So we know we've got that going on. That can oftentimes set up the C point of an A to B equals CD to the downside. That is a possibility. Same thing really inside of the Dow. So unless the Dow doesn't get above that 0.78, the high from Friday out there, it's got the potential of that being the C point of an A to B equals CD to the downside. I really I can tell you here honestly, I don't know which direction this market wants to go. And I'm in a neutral position out here for a number of reasons. And so I'm just going to sit back and at this stage here, play this game by just simply watching to look for some additional messages of the market out there. If we take a look at the TAS profiles out here, well, we're a ways away from resistance. Of course, this is a new profile. Looks like it's been established here that began on Friday. I'm going to go with the old profile, which says that we're trading right about at that old resistance line. So I'd have to say that's around 42.09 or so. You're trading at 42.13. So if it's not able to clear, well, look, if it's not able to clear the high from Friday out there and it trades lower, more likely than not, we're seeing an A to B equals CD to the downside. That's the message inside the NASDAQ as we speak right now. If we go take a look at the ES Mini, this is so I don't have all the stuff out here on the ES Mini. Let's do this. Let me delete this here for a moment. It too broke a price channel. Let me just use the trend line out. Let me see if I can do this. So we can see if I can draw this. I just grabbed the wrong thing, but I can move it here. I'll just take that and then move it. So there we come on, move for me. There we go. So there's really your trend line. You can see really that or the top of the channel line, either or. In this case here, we saw a nice wide break of that. So that took place a couple trading sessions ago on January 8th. Now, if we go take a look at, let's get rid of that line altogether. Let's go take a look at retracements. The retracement from high to low inside of the ES Mini. What we're going to see is price made almost made the 0.786 retracement level. It didn't do it exactly. The high on Friday was 2062. 2066 was your 0.786 retracement level. Good enough for us. Now, if we take a look at its market profiles out here, Let's do that. Come on, stop that. Stop that. Let me get rid of this out here. If we take a look at it, same kind of thing where it's got a brand new set of profiles out here. Let's just fall back to the old set that was out here for, since the middle of December through a couple of trading sessions ago. And price is pretty much above that area of 2027, so somewhere in that range. So this chart here for the Dow says, hey, looks pretty bullish. So what does that mean? That means if you do see a move above, a close above Friday's high out there at 2062, we're very likely, number one, got a couple things that could be going on. But first, the message would be you're going to go test out the highs from December. Could also say you've got an A to B equals CD to the upside out here. So we'll just, with the A point being the low here on January 6th, the B point being the high out here on Friday, and the C point would actually be the low of Friday as well. So it would be kind of a double message out there. So that's what's going on inside of the daily charts for the futures market out there. If we take a look at the Russell 2000, just go ahead and try to finish this off. Again, there's a 10-minute delay on my chart out here, but price should be right around this area of 1181. Same thing out here. You got a break on the daily chart of its descending price channel. We're going to go ahead and turn that off on our screen. Now, in the case of the Russell 2000, quite a bit weaker than either of the other three out here. If we take a look at now, when I say, well, maybe I shouldn't say that. Maybe I'll have to take that back. We're going to have to just, because of the tape delay that we have here. Al, would you just rewind that and delete that? No, I'm just kidding. But if we do take a look at coming from its highs back here on December 29th to the low out here on January 6th, truth is it's actually made a 0.78, it's made a 0.618 retracement level. That 0.618 was 1192. It actually hit that on Thursday. It hit it again on Friday. So, we're not going to say that it's weaker than the other guys out there. If we take a look at where it's trading with regard to its TAS market profiles, it's got some work to do out here. Now, even with regard to the one that formed a couple trading days ago, it is below the resistance level at 1198.42. So the key here with regard to the Russell is going to be getting above that closing above 1198.42. If it does that, could be an A to B equals CD up. It certainly would say that you would go test the highs out here from December 31st. Looks like that's what the highs were inside of the Russell 2000. So that's what's going on the daily charts for each of those charts. Key level here for the ES Mini today. Another level that you're going to want to watch is 2041.75. And inside the ES right now, you are trading at 2039.75. That's really a key level here. If the ES Mini is not able to close above that area, what I can say is that suggests to me we're going to see some downside pressure inside of the markets. And that downside pressure most likely would then start to confirm that A to B equals CD. That says that we go test the lows again from last week. So that is my view as to what's going on inside of the market. I can give you bullish signs. I can give you bearish signs out there. We do not have anything across the board that says all signals are a go. If we take a look at some of the other things moving in the markets, let's go take a look at the let's look at the currency pairs here next. Of course, looks like we're going to have to save that till we get back from the break, but let's start out with your favorite currency pair in mind. That is our Euro Japanese Yen, trading up just slightly as we speak right now, but the reality is no kind of bullish reversal signal inside of the market. This says at this stage of the game that this wants lower price, and its next move down probably takes us into about the 139.42. You're at 140.47 as we speak right now. This is Steve Rhodes. This is TFNN. We'll be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went into that break, we started to look at the currency pairs that are out there. So inside the Euro-Japanese yen, this is the currency pair that tracks our stock market, the U.S. stock market, better than any other currency pair. No bullish reversal signal as of yet. That could change throughout the day, but as we speak right now, no bullish reversal signal. We've seen the price moving sideways here for the last four trading sessions, last four trading sessions. Now, that's to be expected. If you take a look at the bottom panel of my chart out here, that's your 14-day, 14-day in this case, because we're looking at a daily chart, a relative strength indicator, and it's in the oversold territory. And to work off an oversold condition, the markets can do really one of two things. They can move sideways, which is what it's happening here, or it can just simply move higher, bounce higher. We have not seen that inside this currency pair out there. Always suspect when you work off an oversold or an overbought condition by moving sideways, said that trend is basically set to continue. We're just getting rid of some of that elasticity inside that rubber band. Now, we have a little bit of a different story here inside of the daily chart for the euro. It's actually given us our first signal of a potential bottom out here. Now, it's done that at the same time on its daily chart as making a 1 to 1.618 A to B equals CD to the downside. And I do want to thank all of the tigers and tigresses that joined me for the 7-week trading course. That all culminated on Friday. We did our second 3-hour live webinar out there, and during the 2 webinars and during the 6 weeks in between there, I gave some really good morsels. So a lot of great emails coming back from attendees out there, and I do want to just say that I am very grateful that I had the opportunity to serve each of you that attended the workshop. You can still get it. If you missed out on it, they're archived. It'll still give you access to all the great information. This is information that will last a lifetime for sure. So you can go to the homepage at TFNN.com. You can email me, Steve, at TFNN.com as well. We can get you all set up for that. Now, when we take a look at the euro itself on its daily chart, a little bit different look than on the weekly chart. So right now, we're just taking a look at daily. Weekly chart still says that the euro wants lower price. The daily chart says, hey, this may be a time where we see a bounce, and we can talk about where that would take price up to. But what we are seeing, what took place on Friday, was in essence, a reversal signal, a little bullish engulfing candle, and that was at the completion of a 1 to 1.618 A to B equals CD to the downside. If we take a look at the, give me one moment here, I want to just do one other thing here. Where is it? Right there. Let me add a couple more decimal spots. Where's my decimals? Come on, where's my decimals? There we go. A couple more decimals makes a little bit, not 42. You don't want to see 42 decimals on my screen. That would not look very good. There we go. Put 4. Okay, there we go. So as you take a look at the euro, the price projection was 1.1746. The actual low that we saw, that was on Thursday, was 1.1754. Then a little bit of a nice bullish engulfing candle. We haven't seen any confirmation, some follow through here this morning. But if we do see, I won't say this morning, today, if we do see a close above 118.40, you're at 118.16 right now. Then what that says is we ought to, at a minimum, get a bounce up to the 119.75-ish type range out there. That would set up a decent small intraday trade for someone. And then the question becomes, if we close above 119.75, then what happens? Well, as far as what happens, first what I would do is just simply take a look at the small. Let me turn a couple things off here just to make it a little bit. Let me turn off the A to B equals CD. So to give you an idea of where the euro could bounce to if we get a close. Now, that would also put some weakness inside of the U.S. dollar index, so because of its weighting structure. So it would say if you get to the 119.75 level and you get above that, then the 0.382 retracement of 120.66 would be the likely next stop, and then even a nice healthy bounce up to 122.58. Now, is that going to take place between now and I think it is January 22nd when when Mario Draghi and the ECB come out and they say what they really are or aren't going to do out here? I think they have a cooling off period, don't they? They have what they call a quiet period, which I think ends in a couple of days or so. But that doesn't mean that things have to get quiet because there's always leaks out there. But let's just pay attention to what the chart patterns are telling us, because that's really where the real message of the market comes from. Now, with regard to Friday's bounce, coming for an extremely oversold condition out here. So, again, no follow through today. But if we do see a higher move today, it does say to me that we should expect a bounce in the euro. That would then put some weakness inside the U.S. dollar index. And for all of you that are long gold and silver and or the miners, you should be expecting a significant bounce out there. But quite frankly, it's just easier to just go ahead and trade each chart, because let's face it, the correlation between the U.S. dollar index and the minings, this gold and silver, it's vanished. It's gone. It's gone out. You can justify it. You can justify it all that you want, but the reality is they're not moving. There's no tango going on between those two. So just trade each chart separately. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 4 points. Trade out at 17,741. S&P back a point at 2,043. Composite up 3 at 47.07. Russell 2000 up a point right now. She's trading 11.86. Goldilocks up $6, $7. Silver up 11 pennies. Platinum's up $8. Light sweet crude back $1.68. Leading the charge to the upside, it's Foundation Medicine up 120% out there. They clearly, is this an IPO? No, it's not an IPO. What did they do? Oh, they're going to be acquired by Rhodes. Okay, that makes sense. cents out there. That's a nice premium. That is a nice premium, 121% here this morning. You've got also MWI Veterinary Supply. That's up 8%. MMIV is a ticker symbol. Techmira Pharmaceuticals up $7 and change. Allergan, it's up 2%, up $4. Lululemon up 6% this morning, up $3.75. To the downside here, the blue box, Tiffany and Company down $11 as we speak right now. SanDisk off $11 as well, both down over 10% this morning. We'll take a look at those two stock charts. Tesla's off 2%, down $4. Google off 4. EOG Resources down 3. GoPro down a couple of bucks. Anadarko Petroleum off $3 as well. So we're out of the gates here, and it has been the sell-off. Again, the key number to be watching inside of the ES Mini today is going to be 2,041.75. Right now, just simply acting as resistance. So let's go take a look at a couple of these equities here that are moving, and I mean moving and grooving to the downside. SanDisk jumping into the number one spot. They were out with, let me see, their fourth quarter revenue. Looks like they've missed their numbers out here. But I don't have the details on it. It looks like it's going to be about $1.73 billion versus 1.8 to 1.85. Nonetheless, let's go take a look at SanDisk and see what it's trading into. So gapping down, pretty good volume so far this morning, 3 million shares to the downside. This is trading all the way back into its swing point from October the 15th. Now, that swing's only got 5 million shares. The top of that swing is $80.20 out here. Let's go ahead and let's see if it's actually hit that level here or where it's trading at. So it's hit that level, so it's tested the swing point. Now, doing it with big volume. If it closes inside 84.93, that says that it ought to at least go run down and test the low out there of $80.26 out there. So we'll see what SanDisk is able. Let me pull this back just a little bit further, see what else might be out here. Okay, so in SanDisk, so this has got really good support right in this area here. Let me turn a couple things off on the charts, just make it a little bit easier for you to visually see what we're looking at. I'm going to turn off the TAS boxes. I'm going to turn off the moving average as well. So we're just really going to clear this up here. Okay, so now we take a look at what SanDisk is doing and where it's got a pretty good, which should, we'll take a look at volumes out here. So that's how we'll measure it. So you can see at the low here of the trading session from April 17th, had a big breakout, wide price spread and accelerated volume. There were 12 million shares, 12.3 million shares specifically on April 17th. Now that level was tested, that $81.40 area was tested back at that swing point from October 15th. And that was tested with 5 million shares. So you had 5 million shares going against 12 million shares out there, and then it was rejected. Price went all the way back up to its prior swing point, to its prior gap down out here. So here's the consolidation level, in essence, that you've got SanDisk trading within. That's the breakdown level, which took place in this case on July 16th, July 17th, 29 million shares to the downside out here. So we can see that the consolidation level for SanDisk is somewhere between the $81.40, $85 where it's traded at right now to a 105 level. So, it ought to find decent support here at the $81.40 mark out here. If it breaks through that, then you've got SanDisk getting all the way back down to 73 or so. That's what its chart is communicating to us as we speak this moment. Let's take a look at Tiffany. She just jumped out in front here. So we got the blue box out here. That is trading down $11 with 1.1 million shares. Tiffany reports holiday period sales results. They must not have been that great out here, down 1%. From, let's see, 2-month holiday net sales. So for 2 months, it was down 1%. Let's go take a look at Tiffany, see what it's doing. So Tiffany had broken out back here. So it's almost looks like we're looking at a similar type of chart out here. Come on, just give me that, would you? Give me that. We take, what I mean by that is Tiffany broke out. Its breakout session was on May 21st. That was with big volume for Tiffany, 5.9 million shares. Price came back into that breakout session back on October 15th. So you can, talk about similarities here. 1.7 million shares was going into a breakout that had 5.9 million shares. Now, this morning you've already done 1.2 million shares here. You're not down to the, so it looks like Tiffany should at a minimum head down to 88.68, probably 87.99, and test that area one more time. So you're $91. So looks to me like you've got at least a few more bucks to the downside inside of that. If it breaks through that, what does it mean? good question out here. Let me pull this back a bit further, see what we can find out here. It would say you'd probably get down into the $80 area, 80.41 or so, inside of Tiffany. What else do we have here? You got Bit Auto, BITA is the ticker symbol. That's trading off 10% as well, but we've got 3 to the downside in the 10% range. I don't see what's going on out here other than somebody making an investment. I don't know if they're floating more shares. But if we take a look at Bit Auto, down with 470,000 shares here today. Let me see, what's this trading back into? Well, it's been in really a horizontal consolidation. That horizontal consolidation for Bit Auto, oops, not there. I'll pull that down just a tad. But it's really right around the $63 mark up to $98. So it looks like the way this is trading here today, she's going to go ahead and make her way down into that $62 range. You're trading at $78.20. If it breaks through that consolidation, then quite frankly, what you're looking at is $62.98. You're looking at a $36 move, 3600. Wow, that would be a $30 stock or less out there inside of Bit Auto. BITA is the ticker symbol. But first, it's got to deal with the $63 area, the bottom of its consolidation. If we take a look at things here that are moving to the upside, you've got this MWI veterinary supply out here. Let me see here. AmerisourceBergen, no. So ABC company, AmerisourceBergen Corporation, looks like they are going to contribute. They are going to acquire MWVR. So that's what we've got going on with these two, the first two equities out here. Techmira Pharmaceuticals, not the same thing. Okay, so you've got the ProShares. SCO is the ticker symbol out here. That is trade. Now that's the short for the for light sweet crude. Now if we take a look at light sweet crude, let me see if I can do this. Let's pull this chart over here. Here is the current contract out here. And what it has done right now, it's trading right around 46.62. Now, this has the possibility we could be looking at a bounce. So it's kind of interesting here when we were taking a look at the U.S. dollar index. So light sweet crude and the U.S. dollar index, they've at least continued to do a version of the tango, a stronger dollar, weaker crude oil price out here. Now, in the case of the U.S. dollar index, we were looking at the euro, right? The euro gave us a nice little bullish engulfing candle on a daily chart. We're only talking about I'm not talking about a major reversal here, and I'm even talking about a reversal until we see how it trades today. But what we are doing is we're taking a look at some things that could be lining up here. If we take a look at light sweet crude, we know that it had been moving lower with less relative weakness out here when it got down to the lows out here on July the 7th. Now, let me do that. We should still be, I'm going to take this off the screen here just for a moment. So I need to go take a look at something. And I didn't want to confuse anybody. Let me see. Let me find my pattern out here. I might have this set to the bar close. So let me see if I have it. Do you calculate on bar close? Yeah, I do. Okay, so I'm going to turn that off. And that way I can see if we still have that same pattern stuff. Looked to me like we did, and I didn't see it on my screen. So there we go. Okay, so now let's pull it back over here, because here's what I want to show you. And again, we're just kind of we're sniffing around looking for potential. We're looking for patterns that could offer potential lows for us. Now, what we can see here inside of light sweet crude, I'm going to try to blow it up. Can I do this yet? Can I move it higher? No, I can't do that. That was pretty silly. What we can see here with light sweet crude is she's been moving lower and doing it with less momentum, less weakness out here. And what it's also done, if we take a look, so we've got that going for it. It's got that going for it. Now, it's this whole pattern here can totally evaporate because we could get the big momentum push. We know that on the longer term basis, you're inside a swing point that says the $30 area is where this wants to trade to. But again, we're looking at a daily chart out here, and that's what we're focused on at the moment. We also happen to be in this third. If you come off of the highs out there and you start doing the wave counts, the Chapman wave counts on the way down, we're in our third, seventh wave to the downside. That took place here this morning, about a half an hour ago, as we got down to that G level out there. Now, when we get a confirmation of that, I mean a higher close tomorrow or whenever that takes place, can't tell you when it's going to take place out there, but that sets up a possible trade for us, because your stop is really right below. It's like one tick, 1 penny in this case here, below the low of that. The problem is we don't know when the reversal takes place, how wide the stop will end up being. But what we do know is you've got two patterns that are lining up here that say potential. Only potential. And when we take a look at what went on, or what may be going on inside the euro, therefore what may be going on inside the U.S. dollar index, says you could see a bounce. Now, what would that bounce be? Inside the light sweet crude, it could be a $5 bounce. $5 bounce, in this case here, would be 10%. Right? You're trading at $46. So it'd be a little about 11%. You'd be over 10% out there. So we're not there, but it is a pattern that is potentially setting up out there, and something to most certainly be aware of. So that's going on inside of the light sweet crude complex. We haven't looked at Goldilocks here today. Let's go take a look at Goldilocks and silver. If we take a look at gold, she's trading up at the 1224 level. At 1224, it is above the trend line out here. Let's go ahead and draw that trend line back in. If we take a look at that, let's go draw that in red. Come on, work for me. Oh, let's do it in green. Let's add a nice green line out here, because this could be all points bulletin. It's broken out. So here is the trend line here for gold. Now, totally different than the trend line that we were looking at inside of the futures contracts. The way that you like to see something break a trend is with a wide-ranging bar out there, and we haven't really seen that. Although I think inside E-signal, I think this closed on Friday is incorrect. But I've been resetting my system. Here's what I do know. Where price is trading at right now, it's trading at 1223. And 1223 is clearly above the trend line out there. And this morning it came back, it tested that level. So a close above that trend line would be bullish out here. Now, what it needs to, how about that? What it really needs to do is close above the price point here of 1239. You get above 1239, and then you've got an A to B equals CD to the upside. Now, that A to B equals CD to the upside, that would look like this. Your A point would be down on the lows of November 7th. Come on, do that for me. Your B point is going to be, let's see, is it 1239 even? Yes, 1239 even. That's the high from December the 9th out here. And your C point is going to be the retracement down in January 2nd. And your 1-to-1 would take you up into the 1274. I would say, and you made a 0.68 retracement. I would say the way this is trading, you're more likely looking at the $1,300 area. Excuse me, give me a moment there. Now, let's also take a look at retracements here. So, if this is a real break, and at this stage here, the information says that it is, the 0.618 Gartley sell pattern completes at that 1274 level, 1265 to 1274. So what you want to see is you want to see price coming in there with a widest ranging bar, some accelerated volume. That would be good. And that would then say that it's the 0.786 Gartley sell pattern at the 1303 level, where you would likely see gold begin to maybe tail off out there. But at this stage here, Stevie has to say it looks like we've got a breakout. The key is going to be 1239. Can it get up and above that level out there? Right now, the Dow's off 113. The S&P's down 14. Composite's off 23 points out here. Now, the Dow and the composite being down, that is really what the message of the markets were when they closed on Friday. It certainly wasn't the message of the markets with the indice futures that were trading up. But I can tell you, and the reason why I say I'm neutral when I take a look at this, because we've had some conflicting signals out there. Now, those conflicting signals here this morning look like they have gone away, at least as of 9:48. Those conflicting signals really was inside the summation index here. Let me pull this back for the New York Stock Exchange. She's now back below zero, in essence, where it belongs. But on Friday, managed to close above that zero level out here. And that's on the wider swath of the market. So what it looks like is really taking place out here now, what I'm thinking is more likely to happen is we're now really setting up an A to B equals CD to the downside. So inside the New York Stock Exchange, that ought to take us into the area. The heck happened? There we go. That ought to take us into the area of about 10,261, maybe even 10,111. Now, that does get back into the October highs out here. So you'd be targeting likely the high of that October 15th swing point, which is 10,139 out there. So it looks to me like that is really the move that is underway. Now, that would be if, in fact, we see the markets close lower today. If somehow there is a afternoon rally or something like that, then this pattern here goes away. But the New York Stock Exchange now joining its brother and its sister What do you want to be the brother? The Dow, and the sister would be the composite? By getting its price oscillator back below that zero line. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 116, S&P off 15, composite down 30 points. So before we went to that break, we were taking a look at the, now we're starting to get things that are really in line here with each other. We'll see how the end of the day, but you've got, you had a message from the composite on Friday that said the sellers had taken control out there. With the summation index turning down, with the price oscillator being below zero. So this too could be setting up an A to B equals CD to the downside. Inside of the composite out here, I got to turn it on. I think. I mean, where is it? It's tool's not on out there. I got to insert the tool. That's what Stevie's got to do. Oh, where do I do that? I'll just do the A to B equals CD on a different chart. That makes it a little bit easier. So let me come back over here, and we'll just go to the composite. We've got, there we go. So if we take a look at the composite out here, let me get rid of that A to B equals CD. That had completed. Now, if we take a look at the A to B equals CD down, that is likely what is really occurring out here. What we're going to look at, well, one of two things. The A to B equals CD to the downside takes you, the 1-to-1 takes you into the 44.97 level. So what that says is it at least gets down and tests the December 16th area out here. So, we've got a bit of a consolidation inside of the NASDAQ composite. If it can break through that consolidation area, the bottom of the consolidation, around the 45, 43. So the 1-to-1 A to B equals CD would get you down through that level. Could it turn into more than that? It can. It just depends on how price accelerates into this January 6th, the low out here, how it accelerates into the December 16th. So those are the two swing points really to monitor. And we also had that October 31st breakout that took place. And so price really kind of coming right back into that breakout session. That was the breakout session that was formed when the Bank of Japan said that they were at just all of the new printing presses had come into the shop, and they were getting ready to continue to print the yen out there. The Dow itself, if we go back and we take a look at the Dow here, the Dow price oscillator on Friday, I was unable to get above the zero line as well. So she had given a message of wanting a lower price. So inside the Dow, you're looking at a similar A to B, potential similar A to B equals CD to the downside out here. We're not there yet, but the swing, whoops, and that's not going to work either. Let me, come on, do this. There we go. Let me try to get the A to B equals CD pattern out here. That would give us a price objective of right around the 17,074-ish type level. But again, that just simply gets us back into the December highs out here. That's what's going on inside of the Dow. If we go take a look at the VIX index right now, the VIX index on Friday rejected that 50-day exponential moving average. Price came down, tested it, rejected it. This morning here, moving higher. She's trading at 2018. Anything above the 50-day exponential moving average, that says that you've got trouble in River City, and that's really what's going on inside of the market. So to summarize, at this stage, it does look to me like what has set up here is a move down. Now, this move down could last anywhere between now, and I just gave you some initial targets, but the reality is this move could last anywhere between now and I would say the end of January out here, January 29th or so. So we'll continue to pay attention to it most certainly. If I go back just real quickly and take a look at what the euro yen is doing here. Now, the euro yen, yeah, so again, this is the daily chart. She just sent the message that it wants lower price. So really everything is in synergy at this stage for lower prices in the market, at least the way that Stevie sees it. So folks, it is Magical Monday. Thanks so much for starting your day with us. If you're off to work you go, or whatever it is, have a great day, and I look forward to seeing you in the morning. Otherwise, stay tuned, because hour 2 of the Trader's Edge is up next. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.